Hi everyone, and welcome to this week's Monday Memo. Now, as finance professionals, and in fact most people, think that business is simply about selling more stuff or saving more money, and that as accountants or finance professionals we'd record this type of activity typically in a profit and loss statement. But is this actually enough to ensure that the businesses we serve and the organizations we serve will have sustained profitable growth? And in my mind, I think this is one way of doing it, but it needs to be supplemented or complemented by at least two other ways. Because what I call this sort of revenue expense approach is like a profit and loss mindset, which assumes that everything will be just fine if you can actually sell a greater mix of higher price or quantities while seeking to keep overheads as low as possible when you're doing so. And you recognize these types of businesses because they're constantly looking for ways of making quicker sales or finding savings from suppliers or cheaper staff. And as these enterprises often are unaware of their fundamental flaws in their business models, their products may be becoming commoditized, their value proposition unclear because they haven't positioned themselves as a leader in any field or niche, however large or small. Because as finance professionals, we know that profit and loss mindset is only part of the whole story, because whilst it looks at revenue and expense, it doesn't really question whether you're competing with the right assets. So to improve your chances of success in business, it actually requires a bit of a balance sheet mindset as well. Because the enterprises that have this balance sheet mindset often think about increasing the value of their net assets first, i.e. their equity or assets less liabilities. And so the conversations are slightly more enhanced, slightly different. They consider that they can give their businesses an edge by investing in their tangible and intangible assets. Things like new systems, developing new products, opening up new channel partnerships or territories, refreshing their brand, filing patents, building out proprietary processes, and the list goes on and on and on. So a balance sheet mindset is more about understanding the mix of assets and how they can be best utilized. So if you think back profit and loss, those type of businesses ignore assets and are simply looking to drive revenues, selling what they have to hand. Balance sheet mindset businesses are more focused on improving the assets. And in a previous episode, I mentioned that income follows assets. As finance professionals, we're very familiar with such metrics like return on assets, return on equity, return on capital employed, as well as things we probably should be using more often, which is like revenue per employee or margin or gross margin per employee, very much in the way of balance sheet thinking, so the two together complementing each other. But I'd still caution that even businesses with great or strong net asset positions, and many established brands, for instance, have failed. If you think about the Fortune 500 list, so the world's largest companies, and look back to the list in the year 2000 and compare it to today, only half or less than half of those companies on that list in the year 2000 are still there. I mean, when I was looking at the top of the list, I saw names like Enron, Compaq, Alcatel, WorldCom, Bell Atlantic. And this sort of proves to me that strong balance sheets alone aren't enough. If a business is to have sustainable, profitable growth, it also needs to have a cash flow mindset. And the cash flow mindset is the one that answers the question of whether or not we're in the right business. And we know if we're in the right business, and there's a real simple test for this, is if we're generating net cash inflows consistently over time. And this comes back to the net present value formula, which I've mentioned many times before, which indicates that it's great value over time. We must improve our cash flows, our inflows from assets, reduce any cash leakage, and maintain a healthy level of risk taking. And a cash flow mindset looks at how the profits and the working capital movements on the balance sheet translate into cash flows from our operations, maybe how we can dispose or acquire non-core assets to free up or invest cash or access new funding to acquire or even build better quality assets. So good finance professionals know this and bring these three mindsets together in what I call three-way thinking. And it's a much more joined up, connected or commercial way of thinking that involves finance professionals applying our training, coming out from behind our desks to meet with stakeholders, understand how their value chain fits together where the main revenue and expenses are, the profit and loss mindset, what the key assets are that are driving value and the potential perhaps liabilities to be aware of, so a balance sheet mindset, and whether or how do all these translate into net cash inflows at an acceptable level of risk in a way that creates value in the form of a positive net present value. So a cash flow mindset. And one way I've seen and we shared on the show where this has been applied is a previous guest mentor, Lance Rubin. I think it was episode number 44. Uses a similar three-way thinking in his three-way modeling. All right. And ultimately, that's why we invite guest mentors onto our show, into the Strength in the Numbers show, is to share with you their stories on the things that they've maybe found challenging, the hard-won lessons, and how they've improved and the practical way they've developed models or approaches so that they can not only show you how to deliver value, but break it down for you so you can actually begin copying what they've done to deliver value in your organizations. So you're the one solving meaningful problems and in turn having more fun, rewarding and successful careers in accounting and finance. So look, I hope you enjoyed this episode. A little bit more technical than usual, but again, I felt it was necessary to paint the picture of the three-way thinking. And if you did enjoy it, please share it with your friends and let your colleagues know. We're on all the major platforms, iTunes, Stitcher, SoundCloud and YouTube. And until next time, take care of yourselves and let's keep on building our strength in the numbers.